Hey guys, Stephen Koitzel here with the Trader's Plan, and I had a phenomenal webinar earlier with about top stocks and top sectors with some of the attendees. There was great interaction. It was great information. For some whatever reason it didn't record. I'm sure it's my fault. So I felt that the interaction and the feedback I was getting was really too good to not share with everybody. So this is me re-recording the presentation and the training that I did just a couple hours ago so I can share with you. I'm going to keep this up until Sunday night at midnight so you can wake up Sunday morning, drink a coffee, and whatever the case is. So we're going to go over the top stocks in the top sectors and why that's important. Excuse me. Why that's very important is because according to Investors Business Daily, 40% of your stock's return is going to come from the overall sectors that it's in. So do you want to buy, do you want to keep holding on to that darling coal stock that's towards the bottom and just shows no life? Or do you want to buy stocks that are proving, that are moving up and continuing to move up in strong sectors? So I really want to dive deep and to show you how anybody can screen for these sectors yourself. I'm going to teach you how to do it yourself. And then I'm going to show you how to dive deep into subsectors and then how to find the top stocks in those sectors so you can create a watch list or find stocks that are very, very viable at that moment to just make it easier for you. So that's what we're going to go over. Very, very first, I want to go over overall market analysis and kind of look under the hood a little bit. So here we got a chart of the NASDAQ, and you can see, guys, it's been doing really, really well. It's obviously been a frustrating year, chopped around. We had the flash crash October 24th. It came up and hit this resistance, this 50-day moving average on, what was that, September 17th, after the Fed came out and said they weren't going to raise interest rates. Now, and it chopped around. And you can see right under here it's right under the 200-day moving average. So until this happened, this breakout happened, I considered all of this very bearish activity. So again, you can see the 50-day is still under, that death cross is still under the 200-day moving average, but the 20-day is starting to curl up. So when this happened, I'll be honest with you, I was pretty bearish. This looked very bearish activity, but this happened, things changed. The market truly broke out. It cleared the resistance. It's really stair-stepping its way higher. Now, let me show you something that I have pulled up. Excuse me. So I showed you this of the NASDAQ, right? This, you can go to stockcharts.com and just search volume by price down here, but in the middle of this trading range that happened really from March to the end of August, you can see a ton of volume. You see these spikes on the side? There is a ton of volume right in here. So really, and it really ends at about 5,100, and you can see the NASDAQ is just under that. So really, to feel really good, and I already feel good, stocks are starting to break out, but to continue to charge higher, it looks like the NASDAQ is starting to eat its way through all this volume, and it needs to continue to break out and then eventually clear the new highs, and hopefully we will get that, and we can make some money from it and have a nice Santa Claus rally. So I just wanted to show you that, the market broke out, everything's looking good, but it's still got to eat through this noise over here. So the S&P 500, it's kind of the chart looks very similar. You had some trading market action, some trading range action, nasty cracks to the downside. Market breaks out. It broke out above the 200-day moving average. It's going to be at the same thing. The same noise for the S&P 500 is going to be about the 2100 level, right in the center of this trading range. So just keep that in mind. What I would really like to see happen, the market's kind of been parabolic lately, just gone straight up. What I'd like to see happen is maybe just a weak pause, let this 20-day moving average catch up a little bit, let the index give it, what I call a nice kiss, and then we continue to get that Santa Claus rally. So Will that happen, or will it roll over a little bit more? I don't know. But what would be very bullish if the 20-day could catch up to the overall index, give it a nice bounce, and then continue to march higher. So a lot of things are looking good, but when you look under the hood, there's one thing that still concerns me, and that's the Russell 2000. Now, these are the small cap stocks. These are the stocks that get most of their business from the U.S. This, in a successful bull market, or in a healthy bull market, this index should be leading, because this is your more aggressive stocks, and this index is seriously lagging. It hasn't came anywhere close to the 200-day moving average. You can still, it's still 4% under it. So something you really want to keep an eye on. So it's very clear to me that it's really the large caps, the not so sexy names, the Googles, the Facebooks, the large caps that are pushing this market higher, not your more aggressive sectors, which you would really prefer to see. One good development happened, I believe it was on Wednesday, the Russell 2000 just broke out on huge volume, and it was the first day that I can remember that the Russell 2000 beat out the overall NASDAQ and the S&P 500. So if you're investing in indexes, you might want to go for, the better performing indexes, being the NASDAQ and the S&P 500. It's not to say the market can't move higher, but there's a negative divergence. The large caps are leading, the small caps are lagging. So is the small caps going to catch up, or is the large caps going to roll over? At this point in time, it's just too early to tell. But right now, stocks are really looking healthy. So I'm not going to just look at this and say I'm not going to buy stocks. You want to continue to buy stocks when they're breaking out. It's just something to be aware of. Okay, now we're going to talk about how to really, you as an individual investor, how to really find the best stocks in the best sectors, because that is going to give you the best opportunity to outperform. So I do have a fancy tool that maybe a lot of you don't. So I'm going to show you some of this in as an example, but I'm going to walk you through some other tools that everyone has access to really show you how to utilize this. But I'm going to show you this tool right now to really prove my point. So this tool that I have, it's called MarketSmith, by the way. It ranks 197 subsectors, right? So 197 subsectors based on the overall performance percentage gain of the sector. Now, not surprisingly, beverages and non-alcoholic sector is leading. Now, that's a defensive sector. That's not really what you want to see when the market's taking off, but let's look at a top, whether it's a defensive sector or not, let's just look at the top stock in this sector. It's not your cure cancer type of stock. It's Coca-Cola bottling. Look at this monster move, okay? So here's what's interesting. Over the last 6 months, this sector was ranked 53 out of 197 and then just strengthened. And maybe that's because the market was anticipating volatility. But here's the top stock in the top sector, and look at what it's done. It just continues to march higher. And let's look at the earnings. The earnings are good, but they're not triple digits, right? I mean, I would never complain if I was a company at 30% earnings growth. That's dang good. But, it's not 100 or 150 for true growth stocks, but it doesn't need to be because it's in such a strong sector. And it's just marching its way higher, finding support at the 50-day moving average. And now it's really created a nice tight area. And if it breaks the new highs, I would expect this to continue to march higher. So, I believe in January, this stock was about $90, and now it's at what, 214? That's about 250%. That's about a 250% gain in about 10 months. That's pretty massive, right? That would help all of our portfolios. So I show you that. Now, let's look at the inverse. Let's look at the top stock in the worst performing sector, and let's look at what it's done. And before we move on to that, I want you to see that year to date, the beverages, non-alcoholic sector is up 51%. That's insane, right? For just a simple subsector. Let's look at the other way around. Let's go to number 197. Probably not a lot of surprise, energy and coal. All right, look at the sector. I mean, I'm not getting anywhere near this right now. You know, you might say, Steven, you know, buy low, sell high. Yeah, but you might have said that around here and still be holding it. So I never catch a falling knife. But anyways, let's look. So this sector has been out of favor. 197 has been out of favor for a while now. Nobody loves coal. Congress doesn't love coal. You know, nobody likes it right now. This sector is down 62% year to date versus 51% return year to date. That's a 100% swing, right? That's more than a 100% swing. So let's look at the top stock in this sector. Now, I don't know anything about this company right here, but here's something that's interesting. Look at the earnings. The earnings are up 253% in 2015. Guys, that's phenomenal. Anything triple digits is phenomenal. Now, it does go down next year, but that doesn't really matter. 253% growth this year. And look at the stock. It was at, let's just call it 12, and now it's at 6. So these fundamentals, the earnings growth are actually better than Coca-Cola, and Coca-Cola has almost tripled, and this stock has got cut in half. Why? Because the sector it's in, right? It doesn't matter that it came out with a new CEO a couple of years ago. I mean, this sector is beaten up. So which stock do you want to buy? A darling coal stock that you love, that maybe your grandfather worked for, or whatever the case is, that you know is going to turn around. Do you want to buy a stock that's on its way down, you know, that you don't know how far it's going to go? Or do you want to buy a stock that's doing this? So, you know, I've really been doing these sector analysis for several years now, and one thing I found, don't think you've missed the boat on a sector just because it's already number one. These sectors can stay in the favors for 18 months to 24 months. So these sectors can really give you your stock. If you pick, you don't even have to pick the best stock. You can pick, the third best stock in this sector, can really give that stock an opportunity to double and triple, and they don't have to have triple digit earnings, right? They're just in a strong sector. Let's look at sector number 2. I like this sector actually probably more than the beverages because of this. 6 months ago, it was at 197. It is slowly getting stronger. Look, 3 months ago, 61, 5, 2. So there is still a lot of room. The sector is barely breaking out. The sector as a whole looks like it's trying to break out right now. You got Facebook, Google, right? Let's look at the top stock in this sector. This is kind of an ugly chart, pretty choppy, but look, it's still made. Let's just keep it apples to apples year to date. From $10, it's still at $20, even though the chart's ugly. So this stock is still double, right? Not too familiar with this stock. Let's look at Google. So this is a stock you might want to put on your watch list. So again, it's been trading sideways forever. Now it's breaking out. I think this sector has a long ways to go. It's very early in the uptrend. So it'd be very wise to find a stock that you like in this sector and, let it make its move. It's not going to make its move overnight, but it can make some serious moves. So I really wanted to show you this tool to prove my point. It doesn't matter how good the stock is, how good the earnings are. If it's in a bad sector, the stock's not going to do well compared to, something that's, maybe average earnings or average growth. I think we just looked at Google, and here, let's go back there. And 14 to 18%, that's great, but, that doesn't just super excite me. That's growth. That's good growth for a very large company. But that's not, that's not amazing. So let's now I want you to get a piece of paper and a pencil out. I hope this was kind of a good exercise just to show you the difference. And now I want to take you to a tool that everyone has access to, because you might say, okay, Steve, you have this fancy tool, but how do I do it? I'm going to show you how right now. I'm going to show you two different tools that you should have access to. The first one, let's go to iShares, okay? I want everyone right now to go to iShares.com. Okay, go there. I'll wait just a minute. Okay, so we're going to go to iShares.com because they have absolutely an ETF on every sector out there. Absolutely every sector. Mostly. They're not leveraged ETFs though, but they're owned by BlackRock. They're the biggest. They're the best. So go to iShares Resources and go to Tools. Okay, this is a website anyone can access. Now we're going to scroll down a little bit and we're going to get a little tool called Index Return Chart. Okay. Now this is a way where you can easily scan sectors or countries or, commodities or just whatever you want to do, based on the strength. And we want to find, strength follows strength, weakness follows weakness. So we want to buy strength because, you have a likelihood of there being more strength before it gets weak. So I want to start with, let's go to 30 days. Let's just, see what's trending. And we're doing sector analysis. So let's click on the sector right here. Okay, so over the last 30 days, these are the top sectors. And really, that's about what the market's been doing. So you got Dow Jones Basic Materials. So you got the material sectors that pretty much outperforming everything in the last 30 days. You got oil exploration, technology. You remember we just, looked at a technology that was number 2 out of 197. So you got technology here. Technology here. No, you got oil and gold. I'm not so sure about those just yet, but let's just start at the top, right? Let's just make it simple. So why don't you just click on that right there. Just click on the ETF. And now you're like, Steven, how do I find stocks in that sector? Just look at the holdings, right? Look at the top 10 holdings or even the top 5, and there's your watch list, okay? So what we just did is we scanned the last 30 days what the strongest sector was. And then we clicked on that ETF and we say, what's in that sector? Who owns it? And these are the top 10 holdings. Dow, Monsanto, probably a lot of names There's your watch list, guys. You just narrowed down, your watch list significantly. Let's look at, 6 through 10. International paper. So you can also look at all the stocks in this, but, let's just try to keep it simple, stick with the top 5. So then you might ask, Stephen, what do I do from here? Well, you want to take these stocks and screen them based on relative strength. You want the strongest stocks because I think we have proven that, sometimes even though, let's just say Monsanto has better earnings than Dow is up more. That's your leader, right? The leader is the stock that is really, truly performing the best. And that's what you put on. So let's say you put all 5 of these on your watch list, you screen them, whichever one's performing the best, top 2 or 3, you want to wait until they reach a buy point. Let's say if they're already broken out, they're already extended, you can buy on a 50-day, it bounces off the 50-day moving average, it bounces off the 20-day moving average. You can buy it as it's breaking out to new highs. I have lots of stocks on my watch list that I'm just waiting to enter it, waiting for a pullback or waiting for it to break out. And then when that happens, I'm all over it. So I know you can do this. All right. So let's do it with another one. I kind of want to go to technology. So let's go to the North American technology just because, I know the sector is strong in this internet content. So let's go there. Okay. So you got a strong sector up 14% in 30 days. Let's just click on the ticker. See what's in this. What is pushing this outperformance? Amazon, Facebook, Google, Apple, Microsoft. I'm going to take a guess, but I've looked at a lot of these stocks. I'm going to say Amazon is probably the leader in this. You know, I've been looking at it. Let's go look at Amazon real quick. Okay, so phenomenal earnings, 196% estimated next year, but look at the volume spikes, right? You could, if you'd have paid attention to these 3 volume spikes, you should have been paying attention right here. Was I? No. But I'm saying this is where what really should get your attention. How I scan a chart is I start up here, I move down. Okay, what's going on up here? What's going on down here? And everything I'm seeing looks phenomenal. Volume spikes, volume spikes, volume spikes, you know, that are in our favor. The relative strength line is screaming to new highs. The stock just broke out of a consolidation on good earnings, so the stock has already reported. I really don't recommend right now. I don't buy stocks before earnings. That's really up to you. But I'm just not a big buyer of stocks before earnings. So there you go. You know, there's a leader right there. I typically like to buy 5% within. Let's look at this on daily chart. So you can see it broke out really, really nicely on huge volume, broke out of this little consolidation. I like to buy within 5% above this, okay? So what I might wait is for like a 3 to 5% pullback. Maybe it pulls back to the 20-day moving average. You know, you want to buy as close to support as possible, okay? Because if not, if you buy up here, it might quickly shake you out and then turn around and go higher. And that's just enough to frustrate you. So again, you just went to the sector, you looked at the last 30 days, and you clicked on some of these and found out what's in them. Oh, guys, really quick, that's something I should have done at the very beginning. I want to show you this disclaimer as I'm showing you stocks. I totally forgot about this. We've got to make the lawyers happy. You are responsible for your own trading decisions. This is for educational use only. I'll give you a second to read the rest, and then we'll move on. Okay. Sorry, guys. I had to do it. All right. So that was the 30 days. I hope you're with me. This is a tool, iShares, that anyone can use. It's an open website. Now, remember how I told you sectors can stay in favors for 18 to 24 months, like really, really in favor? I usually like to look at 30 days, 20 to 30 day trend, and then I like to look at 6 months. And what I like to see is some of the top sectors in the 30 days and in the 6 months. Okay, so what do we have up here? We have, you got technology again. It's not only been performing good the last 30 days, it's been performing good the last 6 months, right? It is trending in the right direction. And even if we look at, let's go to this chart. That's not a good chart. Even if we look at this chart, it's really just now starting to break out to new highs. So I think it could have some room to grow. But number one, surprisingly, insurance index. So, you know, let's go see what's in it. Now, does anybody know why the insurance ETF is doing well? Insurance stocks, AIG, MetLife? Because insurance stocks and bank stocks are set to benefit from rising interest rates. So they make more money when interest rates are higher. And that's kind of been the big thing in the news, you know, Janet Yellen raising interest rates. So Wall Street, even though they haven't raised rates, Wall Street is always ahead of the game, always. But for the last 6 months, they've been buying up these insurance stocks that, you know, will benefit when interest rates rise. So top 10 holdings: AIG, MetLife, Prudential. Let's just look at AIG real quick. Let's see if it's setting up. Look at this, okay? Very boring numbers, but the sector is outperforming, so you want to pay attention. Look, the stock is setting up. It's about to break out. It is literally 2% away from breaking out right there. When it breaks out, you can, consider it. Let's look at the top stock in this sector. Awful, earnings and sales and all that good stuff, but it doesn't matter. It's in a strong sector, guys. Look, it's already broke out. It consolidated again, and right now it's just chilling within 5% of support, right above its 50-day moving average, and it's within 2% of this buy point. So, what was resistance is now support. Look at that. Hadn't gone below it. It broke out, and now it's trading sideways a little bit. Not that exciting, but, I feel like I'm beating a dead horse, but it doesn't have to, cure cancer. I'm going to keep using that as an example. It doesn't have to cure cancer for it to triple. And it doesn't have triple-digit earnings for the stock to triple. Now, to have the best combination is you have the best stock in the best sector with the best earnings, right? And we're going to dive deeper into that. So, okay. So, insurance over the last 6 months, the Dow Jones insurance. So, look at that. Consumer goods, retail, guys. That's retail. If you know anything about Santa Claus rallies, you know that retails typically do well going into the end of the year because everyone's buying. Whoops. Oh, excuse me. Consumer goods. This is staples. I'm sorry. This is consumer staples. This is another defensive sector, right? So you have another defensive sector, but again, you got some large names that are really holding this market up. Some very, very large names, that you can look into. So instead of, buying the stock that's supposed to triple tomorrow, you might want to take a more conservative approach. All right. So really, you don't want to overwhelm yourself. You kind of want to stick to the top, really 3 sectors if you can. But I'm just really trying to show you that you can easily find stocks to look at, right? So you find what the best sector is. And so to me, if you want to know my analysis, to me, the biggest winner would be technology, because technology not only is in the top 3 in the 6 month, it's in the top 3 in the 30 days, right? So I'm looking at these technology stocks that are really trending, and they can trend for a very long time. Amazon, Facebook. I bet Amazon does pretty well, I would assume, because, it's almost Christmas season. People are going to buy off Amazon. I buy off Amazon all the time, right? They're expecting traffic to grow. Facebook, Google, these are names we know, and these are the names that are moving the market. So I feel confident that everyone can easily do this, right? You can easily find the best sectors. I'm just going to kind of quick recap before I move on to another trading tool. So iShares.com, iShares resources, tools, scroll down, and we got index return charts. I never look at, I typically don't care what happens, in a day. You want to know what's trending over 30 days, Indonesia, but I'm talking about sectors. Materials is the best over 30 days. Technology is the top 3. And then in the 6 months, consumer staples, insurance, technology. So I'm probably concentrating on technology right now based on what I see. So I showed you that. You can email me with questions on that. Now let me show you something else. So I use Charles Schwab as my broker for no particular reason. That's just who I've been trading with for several years. I haven't really used anybody else other than when I was a financial advisor. I used a very large broker dealer. But this is who I use. I'm more of a routine kind of guy, so if they don't make me mad, I'm just going to keep my money with them. So everyone can screen on iShares, right? You can easily find 5 stocks in your Sunday morning routine to put on your watch list and see if it's near an actionable, see if it's actionable, right? See if it's buyable. Now I want to move over to the brokerage platform. So no matter who you're using, Schwab, Merrill, TD Ameritrade, they all have some kind of, screening brokerage platform. I guarantee you every single one of them has a screening performance. If you don't know where that is, call your broker and just have them, you can watch this and watch what I teach, and you can take notes, and you can have your broker make sure he shows you how to access it. So we're going to look at pretty much the same thing, but more in a brokerage setting, because, again, relative strength really trumps everything. So if you're in a strong sector and then you have a strong stock in that sector, you want to try to find that near a buy point. So right now, let's start with the 6 month. So let's go to the strongest sectors in the last 6 months. Guess what? Of course, IT. Yeah, IT, consumer staples, which again that's more defensive. But then you got consumer discretionary. So you got really, in the last 6 months, you only have 3 sectors that are positive. All right. So let's look at the last 20 days. Last 20 days, you got IT, you got materials, you got industrial. So all, pretty aggressive sectors. But IT, again, beats it. So let's focus on this. Now, IT, let me explain this to you. IT is just a large category. It's a large sector. We want to break it down into subsectors, right? Because you don't want to just go buy any IT technology stock or ETF out there, right? You want to buy the strongest subsector. And I'm going to show you. So I can go, okay, so in IT there are, looks like about 8 subsectors. What's the strongest subsector? Internet software. And it's funny, even in IT, you can see there are 1, 2, 3, whoops. You can see 1, 2, 3, 4 subsectors that aren't even positive over 6 months. So breaking it down into subsector makes a huge difference, okay? So the software and the internet software and services are the 2 winners. Let's dive even deeper. So I'm going to dive into internet software, okay? So let's break it down. Okay, so do you see what I did? I'm going to backtrack. So IT, I pinpointed that as the top sector over the last 20 days and 6 months. I looked at the subsectors, and the internet software and services was the best subsector in that sector. So now I'm going to open it up to look at stocks. Okay, so I have it based on performance because those are your strongest stocks. This stock just bought out, so I'm not going to focus on this. But if you really are just looking for ideas, just go with the top 5. Or go after the stocks that you're familiar with. So let's just look at this stock because I'm familiar with it. It's number 2. It's up 60%. So it's a Chinese stock, so trade with caution. But this isn't a recommendation, but I'm just trying to show you how to utilize these tools. So you can see that in the last 20 days, this stock is up 60%. That's massive. It hadn't even been around 6 months, but so let's look at it technically. It broke through the 20-day moving average. It broke through the 50-day moving average, and it's going pretty much straight up. Now you want to look at the earnings, which I'm going to show you. I don't like Charles Schwab's fundamental screens. So you can, take the top 5 stocks and do a little bit deeping digger. So I'm going to go to Yahoo Finance. I'm going to type in the stock, and then I'm going to go down here to analyst estimates. So I can just look at their earnings and sales. So you can see the current year is expected to be 0.15 earnings per share. Next year, 0.36. That's more than double. So the earnings are expected to double, more than double next year. I like that. Sales are expected to go up 42%. That's hard to do. I like that. I like this stock. It's Chinese. Will I buy it? I don't know. Right now, the stock is extended, so you could put it on your watch list and say, okay, I'll wait till it pulls back to the 20-day moving average, and if it finds support, I'll enter there. or what probably will happen, it'll probably create some kind of cup consolidation, and as it breaks to new highs, then you can buy it right there. Let's look at this on another chart. So same stock, downtrend, boom. Look at that spike. Something's going on, right? Solid earnings growth. I like it. On the daily chart, it's smooth trending up. Volume's picking up. I'll wait for maybe a nice pattern to emerge, and then as it breaks new highs, I'm in. Okay? Let's look at another one. We'll just keep going down, guys. What is doing good? Because here's what I have found. I've been trading stocks for so long, even though I'm a young guy, I've been trading for a while. When I was a financial advisor, I went back and I did post-analysis of all my stocks. The stocks that I bought as they were breaking to new highs continued to go higher on average. The stocks I was value buying, Warren Buffett style, buy low, hoping it would turn around, almost every single one of them continued to go lower. So you want to buy stocks on its way down or on its way up, right? So you have this meet me, all right? Not too familiar with this company. Maybe somebody is. So what's going on? Let's look at the chart. So looking at a 3-year chart, it looks like it really has been a downtrend ever since the beginning of 2014, but all of a sudden something happened, right? It's got this bottoming formation, this bottoming consolidation, and it cleared this pivot right here. See, it cleared this one, and it cleared this one right here. So you could see it hit resistance and it went back down, but now it's cleared them, right? It cleared 1, 2, 3 pivots, almost all at the same place. Funny, huh? Funny how that works. So this stock really does look extended right now, but again, you could wait for it to pull back to the 20-day moving average, to the 50-day moving average, or wait for it to make a base. Let's go look at its fundamentals. I'm going to use Yahoo because I know you guys don't have access to the MarketSmith, and I want you guys to easily be able to do this yourself. So I'm going to show you the tools that I at least know you have access to. Okay. So earnings 0.14, 0.19. Now I can just do the simple math in my head. That's about a 25% increase. That's a pretty decent increase. Sales are 13% growth. So, it's growing. It's growing. It's breaking out. It's in a top sector. So maybe that's on your watch list. So you can continue to just kind of dig in and easily find stocks to put on your watch list. Or you can just be like, okay, I just want to go after the stocks that I already know. Alibaba. Everybody knows that. Guys, if you'll notice, this is really interesting and really exciting. Maybe I'm kind of a dork for thinking that, but don't all these charts look the same? Downtrending, boom, breaking out. Downtrending, breaking out. Downtrending, breaking out. Don't they all look the same? It's funny how stocks in the same sector move together, no matter if what the earnings are or not. So Alibaba, everybody knows that. Let's see if I can get some growth metrics. Annual, I like the earnings per share growth year over year is 24%. Quarterly is 28%. Sales growth is 40%. Stock's looking good. Again, this is not a buyable stock right now because it's extended, but we wait for a pullback. We wait until it creates a pattern, and then we're in. Now, LinkedIn, I bet you know LinkedIn. Let's go check it out. Let's go over to Yahoo. LNKD. That's pretty good growth. Let me do kind of some quick math. What is 3.52 divided by 2.25? So 56% growth rate expected year over year. Actually, I would bet that it will give me some numbers. So LinkedIn right down here. Projected earnings per share, 5-year growth rate of 40%. So what that's saying is for the next 5 years, it's expected to grow at a 40% clip every year. I like it. Those are solid numbers. Those are solid growths, especially for a massive LinkedIn stock like this. if that's something you're interested in, you can put it on your buy list. And just, again, all these stocks in this sector seem to be extended. It doesn't mean they all are. So okay, so I think you kind of get it on that. Let's look and see if we can find a stock in a sector. Let me see if I can find another one. Consumer staples. Yeah, let's go defensive. So in the consumer staples sector, what's the best performing sector? Tobacco? So look at the difference, guys. Look at the huge difference between just buying a consumer staples ETF. Look at the huge difference between the tobacco sector inside this and the food and staples retailing. I mean, it's night and day. So let's dive in. And again, guys, I guarantee you your broker has something like this, so I want you to call them. So let's see what the top tobacco stocks are. Reynolds. I know this stock very well. It is definitely a leader. Let's look at the 20-day performance. I'm really not crazy the fact that tobacco is leading, because again, that's a defensive sector, but that's probably another conversation. But look right here. The stock broke out of this pattern, this little cup consolidation. It broke out with a buy point of, let's just call it 44 and a quarter. Right? It broke out. When it breaks out, that's buyable. Now, here's another buyable area. It's riding the trend of the 20-day moving average. Right? You can buy it if it bounces. The first two bounces are the most successful ones. So if it gets within, 3 to 5% of a 20-day moving average, you can buy that. That's a buyable situation. I don't know how far it is off its 20-day moving average now. Let me look over here. So right now it's within 2%, 2.5% of its 20-day moving average. It's moved up 10%. Me personally, I might think it might pull. I'd probably prefer to get it as it's going to ride the 50-day moving average, but that's just me. But again, you're looking for stocks that are near breaking out, or stocks for your watch list. So what is this stock? 22nd Century. I don't know what that is. XXII. I got to bring it over here so I can kind of look at it on my situation. It really looks like it's breaking out, but I'm not interested. I don't get interested in stocks that just aren't profitable. I'm just not interested. ECIG, what is that? Electronic Cigs International. It looks like a penny stock, but even if you're into that, I bet, at least for me to get into stock, it's got this bottoming formation right here. Once it clears this pivot over here, 45 cents, you can definitely respect that breakout. Then it would probably need to clear this pivot, of 69 cents. So, if you believe in it, that's something. But I really think the best of the best in this is Reynolds. And, you might wait for a pullback for that. So, okay. So to recap, I look at top sectors on the 6-month, and then I like to even break it down to see, are they still in the top in the 20-month? And IT, and it looks like industrials are doing well. So let me see what inside the industrials is doing well. It doesn't seem to be loading the numbers for me. Okay, there it goes. Industrial conglomerates. What is in that? Here, let's just go with airlines because I know what. And airlines are doing good because fuel prices are low. So, what's the best stock in airlines? Hawaiian Holdings. So check out what this stock is doing. Okay. It broke out as long consolidation, and now it's starting to, looks like it's trading sideways. What would be a decent entry for this? See if the 20-day could catch up and then give the stock price a little kiss and march higher. Always make sure you know when your stock is reporting. I'm not a big fan of, I don't buy stocks before reporting. I just think that's too risky. And sometimes I won't even hold a stock as it's reporting earnings. So I really kind of want to I hope this was good information. So I really want to kind of recap. You know, we went over how to find stocks in the iShares, right? You can easily scan for the top ETFs or the top sectors in iShares. Everyone has access to that. You can also have a scan for, you know, in your brokerage setup for sectors, and then break it down into subsectors, right? And then within the subsector, you really, you know, if this stock, let's just say this stock, so you got WB down here, and it has 100% earnings, but this stock up here that's performing twice the rate has, let's just say 20% earnings. I'm buying this one because it's performing better. For whatever reason, Wall Street likes this stock more than they like, you know, this stock with better earnings. So, Weibo, wow, look at this. This is actually kind of interesting. Look, this stock right here, it looks like it kind of broke out. I don't know if that's a breakout. Probably bounced on earnings, and now it's coming back to touch the 20-day moving average. Maybe it'll bounce. But I'm always going to buy the stock that is the better performer because, you know, guys like you and I, individual investors, we're not going to move the market. Unfortunately, I don't own enough shares of anything to move the price of a stock. However, pension funds, institutions, money managers, they do. So we need to find what they're investing in and hop on for the ride and just ride it as long as we can. So I really, really hope this was helpful. I'm trying to think if there's anything else. Yes, there's a couple more things I want to show you. So I got the disclaimer. We already went over that, but I want to show you a couple stocks. So I don't ever want you to be scared of, you know, buying a stock that is already in, you know, the number one sector. Because as I've said, and I know I'm beating you over the head with this, these stocks can stay in favor, these sectors can stay in favor for a very, very long time. They can also stay out of favor for a very, very long time. If you've been trading for a while, you probably know that semiconductors went on a tear from about early 2014 to early this year. So really just went on an absolute monster tear, really since the middle of 2013. But look at this. You know, you have Skyworks. It's just trading sideways. I feel confident that the sector was out of favor. Then it broke out. Lucky for me, I actually bought this because one thing I was noticing, this is how I found Skyworks. You know, if we go back and let's just look at a sector. I like to find, you want to buy stocks that are in the top 20 percentile sectors, okay? So I like to find stocks with sectors that are really starting to come into favor, just like internet content, right? Look at this. You know, 6 months ago, this sector was just, no one wanted it. And it's slowly starting, whoops, excuse me, hate Windows, is slowly starting to gain strength. The sector hadn't even broke out to new highs, and it's already in, you know, the top 1 or 2 of 197 sectors, right? So I noticed the semiconductor sectors was just moving up, and it looked something like this. It was towards the bottom, slowly started to strengthen. So I said, what is the best performing stock, or what's one of the best stocks in that sectors? I found Skyworks. It was just about to break out. I waited about a week for it to break out. It broke out. I bought. And look at the tear that it went on. It tripled in 18 months. Did I triple? No, because I sold right here. I had a rule. I'm going to hold it until it breaks the, you know, 50-day moving average amount. So I got out right here. Unfortunately, it just turned back around and went up. I was on the sidelines, but I still caught about an 80% move. But the point is that this stock and the fundamentals weren't even just spectacular. I mean, it was growing at a 25-30% clip, but the sector was so strong that it was in, it just couldn't hold anything back. Everybody was buying up semiconductors, and it went on for like 2 years. So if you had owned any semiconductors, any top 10 semiconductors, you'd have done very well. Same thing with biotechs. Biotechs, they went on an absolute tear, and the sector was out of favor for so long, then all of a sudden, it just broke out. And this was probably about early 2012. And Gilead, is the leader, was one of the leaders in this sector. Did I own this? No, I never owned the stock, but I'm showing it to you for an example. I would love to say that I owned it, but look, it was up 400% in 3.5 years. So the biotech sector went on an absolute tear. And even though this is a large, monstrous name, this is a very large biotech company, that didn't keep it from going up 400%. Right? So I just want to show you, if you have a stock and you have a leader in a strong sector, don't get cute and try to sell it too early, because it's not the buying and the selling that's going to make you money. It's the buying and the sitting, being patient, right? Not over trading. I know we all like to trade. It makes us feel good. But when you're looking for those leaders in those top sectors, you're going to have to give that stock time to make its move. But, if you pick it right and you do some of the things that I told you to do today, you're going to do very well over time. So I feel it's very important to show you these, just to show you what was possible and how long these sectors can turn into favor. And just to let you know, now biotechs are really struggling, so there's always this sector rotation. And the semiconductors, you can see the stocks rolling over up here. So semiconductors are really falling out of favor. I don't even think they're anywhere in the top. But so you got internet content, banks. Banks interest me right now. Look at this, right? Look at this chart. So you got banks went from 100 ranked 6 months ago to 32 to 6, just quietly creeping up. Money, Wall Street is quietly rotating their money into banks in anticipation of interest rates rising. So find the best stocks in the best sectors, right? So even though I know you don't have tools to this, you do have access to this if you have a brokerage account or some form of it. Please don't be shy. Contact your broker. Force him to show you this, because I can't stress enough how important this is. When I have a watch list of like 250, I immediately scan it by the top sectors. Which of these stocks? I know all these stocks are good, but which of them are in the very top sectors? And that's where I like to focus my dollars on, is those stocks in those top sectors, because I know that historically I'm probably going to get a 40% boost on that sector than if I buy a stock in the middle of the road, right? So I got great feedback earlier, and like a dummy, the record didn't work for whatever reason. So I had to reshoot this for you because it's just too good of information not to share. So you got the way to do this at your brokerage account. You got a way to do this on iShares. I am in the process. Excuse me. I want to show you something. I'm in the process of. I want to put this up and I'm going to send it out. But if you have absolutely any questions, right, I want you to email me, to call me. If you can just hang on just for a minute, at the end of this webinar, I have a very short survey. I would love to hear really, what you liked, what you didn't like, and I have a list of topics that I can potentially shoot and teach you next time. So it'll take literally 30 seconds to fill out that short survey. If you appreciate this information, I would appreciate you taking that 30 seconds to fill that survey out and tell me, what I did right, what I did wrong, and what you would like to see on the next. So if you have any questions about any of these strategies, feel free to email me, call me, whatever the case is. If you are looking for a mentor, or are you looking for a coach, or are you looking to work with someone on a much deeper level, maybe say, Steven, this is great, but I really need a little hand holding. I need someone to teach me to become a better trader quickly. Send me an email, right? I'm only looking for 2 people to work with. I've already got one that emailed me. Send me an email and we'll talk about that. Maybe for something that's a little less intense, if you're just looking for my picks, my ETF picks that has averaged 64% since 2007, or my growth stock picks, you want me to do all this sector rotation research for you, go to thetradersplan.com/annually. I'm not going to go through all this, but go to thetradersplan.com/annual. Take a look at it. Currently, I have a buy 1 year, get 1 year free special. So go ahead and take a look at that. If that is all, I think that's all. Please fill out the survey again, Steven at thetradersplan.com, if you have any questions or you want to see what it would look like to work with me one-on-one. I hope you guys have a happy Halloween. Enjoy the time with your family, with your kids, trick-or-treating, all that fun stuff. As always, be safe, and I'll see you on the next time. Thanks. Bye-bye.